Yesterday, Conservative leader Pierre Poilievre announced that if elected, his government would scrap the proposed capital gains tax changes, something that was welcome news to many Canadian business owners. Our next guest says that a segment of the population views the new capital gains taxes as a tax on the wealthy, therefore confirming their beliefs that the Conservatives are an elitist party. But he says that oversimplifies the situation and that the changes have a direct or indirect impact on all Canadians, really. For more, we're joined by Daryl Ching, managing partner at Vistance Capital Advisory. Great to see you, Daryl, in studio.
Nice seeing you again, Mark.
Yeah, it's been a while. We were just talking about asset-backed commercial paper. Oh. We were having post-traumatic stress thinking about it.
It was. My Black Monday was August 13th when that asset-backed commercial paper market froze.
But it was great to have you on to explain everything for us. All right, so some people, as I mentioned there, view this capital gains tax inclusion rate going up is a tax on the wealthy. But you say that's oversimplified. So can you explain that?
Sure. And I know why people might be thinking that. Does that tax affect the wealthy people that are selling their yachts, their real estate properties, their art collections? Yes, it does. But here's why it's oversimplified. There's 1.9 million small business owners in Canada that run small businesses with less than 100 employees, and most of them are not wealthy. You have 12 million Canadians that are employed by small businesses, and you've got 40 million Canadian consumers that enjoy innovative products from small businesses. So it does impact everybody. Now, why does it particularly impact small businesses? When you think about it, an entrepreneur has to generally put up their life savings or borrow personally in order to start a business, and they take on a considerable amount of risk. And every small business owner can tell you about that dark day where the cash flow turns negative, they have to stop paying themselves salaries. And we've all asked ourselves at least once, like particularly during COVID, why am I doing this? Well, why don't I just go back to a regular job and earn a steady salary? And this capital gains change could be the tipping point that pushes entrepreneurs over, where they say, well, this is not worth it, I'm just going to pack it in. Or even worse, for a successful business going, I'm just going to move to another jurisdiction so that if I'm one of the lucky 10% of companies that succeed and sell, I don't have to pay as much tax.
So what are the possibilities if this inclusion rate sticks and it actually becomes law, or at least the CRA pursues it, which they plan to? So you're hinting at it there. Business owners may say, you know what, I'm going to go to a different jurisdiction, let's go out of Canada entirely. How will entrepreneurs feel in terms of starting a company? And then beyond that, the extended impact of employees of those companies?
And you address another segment, and that's aspiring entrepreneurs. And I know that's a good point, Mark, because for all those people that are thinking about it, I think a lot of them are aware of the risks. People are aware of what can happen. For every glamour story we hear about a successful exit and success stories like Shopify, there's another 20 companies that have failed, and there have been families that have been broken up over the financial stress from running a business. So when you have the inclusion rate at 66 2/3, that makes us one of the highest tax jurisdictions on capital gains in the world, up there with Finland and Denmark. Then you start to think to yourself, well, is this all worth it? Because even if I do succeed, I keep a lot less of that capital. And if I'm going to put in my blood, sweat, and tears, shouldn't I be able to keep most of that money? And you go through that decision process, and it makes it a bit easier just to decide, forget it, I'm just not going to start a business. And that hurts Canadians when people make that decision.
One of the things, Daryl, that you've raised as a possibility might be a 2% wealth tax, which Elizabeth Warren brought up in the States a few years ago. It didn't go through, of course, but why would that be a more efficient kind of tax?
So when the capital gains tax was first introduced by Chrystia Freeland in April, she said she wanted to address the inequality in Canada and sort of tighten the wealth gap. Now, I'm not a fan of the wealth tax personally, but I think it does a better job in addressing exactly what the intention was to tax the wealthy. Because the 2% wealth tax that Elizabeth Warren was proposing was going to tax people with net worths of over $50 million. So they already are wealthy. It's not aspiring entrepreneurs that want to be wealthy. And a lot of times you're taxing a lot of inactive assets, like you're taxing yachts, real estate properties, you're taxing art collections. You're taxing assets that are not generating economic activity. They're not active, creating GDP and hiring people. So the impact is much less than a blanket capital gains tax because it affects less people and it taxes inactive assets. as well. But just to be clear, I am not in favor of any tax that drives successful people away from our country, but I do think that would have been a better step to address inequality if that was the goal.
Now, you believe Canada needs a viable tax regime. We would all like that. How close are we to that? Are you hopeful at all that maybe a new leader, a new prime minister would come up with a better tax system?
You know, I do think that the corporate tax rates, especially for small businesses, is good, and we are competitive worldwide. I find the personal tax very high, and that's something that a lot of individuals will tell you, with the highest income tax bracket being close over 50%. That's higher than most jurisdictions around the world. But I would like to come to a point where we bring our taxes down so that we spur innovation and R&D. The other thing that we want to make sure is we never want to deter investors from coming into the country. And when we have unfavorable tax regimes, we lose investment. We lose investment in infrastructure, in R&D, and innovation. So I think scrapping the capital gains tax is a step in the right direction to getting us back on track to where we need to be.
So just lastly here, Daryl, Pierre Poilievre's on the right track that if he were prime minister, he would scrap this increased inclusion rate.
That is a step in the right direction. I would certainly support that decision. And I think that, you know, just to stress, this is something that is going to help every Canadian. It's not just helping the wealthy people. And that's the message I want to make sure that I convey today.
I think you did, yeah. Thanks.